The major markets ended mixed, as the domestic markets closed slightly lower on the week, while the MSCI World and emerging market indices closed in positive territory. The greatest gains occurred in the emerging markets, as all the MSCI emerging market countries closed higher, many reporting double-digit gains. The gains were fueled in part by a weaker dollar, as the dollar index fell 1.21% last week. Thursday marked the close of April and the best monthly return for the S&P 500 since 1987. The monthly gain of 12.68% helped to recoup a lot of the losses for the index. However, as of Friday's close, the S&P 500 is still down over 12% for the year. The recovery in the month of April has led some to wonder if the old adage of sell in May and stay away, come back again at St. Leger's Day, will ring true again this year. The more Americanized version replaces St. Leger's Day with Labor Day, but both effectively mark the end of summer. This phrase comes from the idea that investors experience better market performance in the wintry months of the year, from September to April, and less so during the summery months, from May to August. There is some truth to this idea, but with some notable exceptions. September has historically been the worst monthly performer, going back to 1950, and has had the greatest percentage of months with losses. Although the very non-summery month of February has shown to perform about as bad as the month of August in terms of average performance and percentage of months with a positive return. Time will tell this year if there's a significant deviation from the historical norms. The first quarter economic reports released so far have continued to show a bleak picture of the overall economy. US GDP contracted by 4.8% in the first quarter. This marks the biggest contraction since Q4 of 2008. The results are especially remarkable, considering that many states did not begin to ramp up shelter-in-place orders until mid-March, when the initial estimates of GDP were still pointing towards a positive 2% rate. Finally, last week the Federal Reserve held the first press conference since the unscheduled March 15th meeting that included a rate reduction to near zero. During the press conference, Chairman Jerome Powell repeated his commitment to maintain an accommodating rate environment and the expansion of the Main Street Lending Program eligibility. On Friday of this week, we will get our first reading of April's employment situation, including an update to the unemployment rate. Estimates currently point to a double-digit unemployment rate, but hopefully less than the 25% peak of the Great Depression.